Wall Street just got punched in the gut. The Dow Jones Industrial Average cratered 870 points. That's a 1.8% nosedive, in its worst single-day performance since October. But here's the kicker. This wasn't about earnings, inflation, or some economic data miss. This was about Greenland. Yes, Greenland. Here's what went down. Over the weekend, President Trump dropped a bombshell. 10% tariffs on 8 NATO allies: Denmark, Norway, Sweden, France, Germany, the Netherlands, Finland, and the UK. And if they don't play ball? Those tariffs jump to 25% by June. The price? The complete and total purchase of Greenland. Markets reopened Tuesday after the Martin Luther King holiday and absolutely freaked out. The S&P 500 plunged 2%. The Nasdaq tumbled 2.4%. Nearly $1.4 trillion in market value evaporated in a single session. The VIX, Wall Street's fear gauge, spiked above 20, its highest level since November. But the real story is what happened to the dollar. The US dollar index crashed 0.8% to a 2-week low, which might not sound like much, but in currency markets that's an earthquake. Why? Because the dollar is supposed to be the world's safe haven. When things get scary, money flows into the dollar. Today it ran the other way. Investors are calling it the return of the Sell America trade, the same pattern we saw last April when Trump's tariff threats pushed the S&P 500 toward bear market territory. While the dollar bled, gold surged nearly 2% to a historic high above $4,700 per ounce. The Swiss franc strengthened. Money is literally fleeing U.S. assets. And Europe? They're not backing down. EU leaders are holding emergency summits, considering a $108 billion retaliatory tariff package and possibly deploying their bazooka, the anti-coercion instrument that could block U.S. companies from European contracts worth trillions. Let's be real, Greenland has been Danish territory for centuries. Trump says it's vital for national security, citing Russian and Chinese Arctic ambitions. But using tariffs as political blackmail against your NATO allies? That's uncharted territory. Denmark's prime minister called it absurd. Germany's Engineering Association is pushing back. Even Italy's Trump-friendly leader Giorgia Meloni called it a mistake. Treasury Secretary Scott Bessent tried to calm markets, telling everyone to take a deep breath. But here's the problem. Investors have heard this before. Last April, similar tariff threats tanked markets, and while Trump eventually negotiated deals, the uncertainty forced CEOs to freeze investments and consumers to pay higher prices. This feels like déjà vu but with higher stakes. So what should you watch? 3 things. First, Thursday's emergency EU summit. If they activate that anti-coercion tool, markets could get uglier. Second, the Supreme Court is reviewing Trump's tariff powers this week. If they limit his authority, we might see relief. Third, earnings season is here. Netflix reported after the bell today, but right now geopolitics is drowning out fundamentals. This isn't just about a frozen island in the North Atlantic. It's about whether the rules-based global order, NATO, free trade, diplomatic norms, can survive when the world's largest economy uses tariffs as a weapon against its closest allies. The market just cast its vote, and it's a big fat red flag. Drop a comment below. Do you think this is Trump's master negotiating tactic, or are we watching a full-blown trade war unfold? Smash that like button if you want more no BS market breakdowns like this, and subscribe so you don't miss our next update. The markets are moving fast and we'll be here to make sense of it.